Here are 4 news items from the world of the crypto industry. First, news. Cardano holders suffer losses. The decline in Cardano's price over the past few weeks has led many asset holders to incur losses. On-chain data shows that the number of intraday losing transactions with Cardano exceeds the profitable ones. Over the past month, the token has lost nearly 10% of its value, reaching a low of 42 cents before bouncing back. Due to the continuous decrease in the coin's value over the past few weeks, most of its holders are experiencing losses on their transactions. The assessment of the ratio of daily ADA transaction volumes for profit and loss, using a 30-day moving average, stood at 0.94 at the time of writing. Accordingly, for every ADA transaction ending in a loss, there are only 0.94 profitable transactions. A value below 1 indicates a predominance of selling pressure over buying pressure for the considered period. As the coin's price drops, many of its holders continue to bear unrealized losses. Currently, 2.62 million addresses, forming 59% of all ADA holders, are out of the money, meaning the current market price of the asset is below the average cost at which the address acquired, or received, the tokens it now holds. Meanwhile, 1.64 million addresses, or 37% of all ADA holders, remain in profit. The Elder Ray indicator for ADA suggests that investments in ADA may continue to lose value in the short term. This metric tracks the relative strength of buyers and sellers by analyzing deviations of the candle's high and low prices from the average price. A negative value indicates bearish dominance. At the time of writing, the Elder Ray index for ADA was minus 0.038. The Relative Strength Index, RSI, is also in a downward trend. Its value at 41.94 signals that selling pressure exceeds buying activity. If sell-offs continue, ADA could fall below the 42-cent support and reach $0.416. However, market participants should heed the market value to realized value, MVRV, ratio indicator, which currently signals a buy. Buying the dip could push the coin to $0.479. Second, news. Ethereum stalls below $4,000. The SEC has approved 8 spot ETFs based on Ethereum, but ETH's price has not managed to break the $4,000 mark. Following the historic decision by the U.S. Securities and Exchange Commission, SEC, to approve the launch of 8 spot ETFs on Ethereum, ETH's price jumped to around $3,900 but quickly retreated to $3,700. Ethereum, the second largest cryptocurrency by market capitalization, is currently trading in the intraday red zone, according to CoinMarketCap. However, over the past 7 days, the token has still risen by 22%, reflecting some market optimism. Yet, the anticipated breakthrough of the $4,000 psychological barrier has not occurred. Crypto analyst Jason Pizzino commented, "The Ethereum ETF was approved, but it wasn't enough to push the price above $4,000. The ETH/BTC pair also grew weaker than expected." Traders' cautious approach suggests they might view the recent news as a convenient opportunity to sell the news. This common phenomenon occurs after high-profile events, as investors take advantage of the price spike to lock in profits. The broader Ethereum ecosystem community reacted mixedly. Pepe, for instance, hit a new all-time high of $0.00001576 right after the ETF approval news but then moved into the intraday red zone. Arbitrum also fell by more than 7% after an initial surge. Meanwhile, Lido DAO went against the trend and grew by 5.6% over the past 24 hours. Overall, the recent SEC decisions on ETFs demonstrate significant changes in the regulator's previously cautious stance. In turn, ETFs simplify investment processes for ordinary investors, allowing them to buy shares traded on exchanges that track the price of underlying assets. For traditional investors, such funds provide a regulated and straightforward way to enter the crypto market without needing specialized knowledge about crypto assets. Third, news. Fantom raises $10 million for new blockchain development. This week, Fantom Foundation, the entity behind the development of the Fantom Layer 1, L1, blockchain, announced the launch of 2 new organizations. Sonic Foundation and Sonic Labs will be the primary structures supporting Fantom's new L1 network, Sonic. Fantom Foundation representatives explained that Sonic Foundation would manage the network and handle treasury functions. Meanwhile, Sonic Labs will focus on growing the number of decentralized applications on the blockchain, increasing partnerships and user base. The project team also announced the closing of a funding round, raising $10 million for Sonic's development. Most of the investment came from the Korean crypto fund Hashed. UOB Ventures, Signum Capital, and Aave Foundation also participated in the round. The funds raised during the latest round will solely support strategic growth and ecosystem development, emphasized Fantom Foundation CEO Michael Kong. Developers of the Fantom L1 network shared plans to launch the Sonic blockchain in March this year. They have been working on it for the past 2 years and expect to launch the project by the end of summer or early autumn. Sonic is primarily designed for fast processing of a large number of transactions. It functions as a Layer 1 network but also includes a Layer 2 bridge feature, allowing Sonic to connect with other blockchains, such as Ethereum. The technology was developed by Professor Bernhard Scholz, chief scientist at Fantom. The development team was led by André Cronje, the project's co-founder, considered an ideological leader in the decentralized finance sector. According to the developers, Sonic combines all the advantages of L2 solutions: low transaction costs, scalability, and speed. The blockchain will have its own token with the ticker S. Recently concluded governance voting approved the token's compatibility with the native asset of the Fantom network, FTM. Users will be able to exchange S tokens for FTM tokens at a 1-to-1 ratio. According to CoinGecko, the price of FTM has decreased by almost 6% in the past 24 hours. The asset's capitalization is estimated at $2.2 billion, with a daily trading volume exceeding $372 million. Fourth news. Trading in spot Ethereum ETFs might begin only in 6 months. The crypto community rejoices as the U.S. Securities and Exchange Commission, SEC, has finally approved the launch of spot Ethereum ETFs. However, trading might have to wait for a long time. Due to some bureaucratic nuances, trading in Ethereum ETFs might begin only after a few weeks at best or up to 5 months at worst. This was stated by Bloomberg analyst James Seifert. The SEC approved 8 Form 19b4 applications for spot Ethereum ETFs. Green light was given to BlackRock, Grayscale, Fidelity, VanEck, Franklin Templeton, Bitwise, ARK Invest/21 Shares, and Invesco/Galaxy. Notably, the decision to approve was made by the SEC's Division of Trading and Markets. Chairman Gary Gensler and other members of the department voted against it. However, trading cannot commence yet. For this, the regulator must sign the Form S-1 registration statements. This form contains important information, such as a description of the business and management structure, financial statements, and risks. Approval of the S-1 form provides the issuer with legal protection. According to Seifert, the approval of the registration applications might occur in a couple of weeks. However, the process usually takes up to 5 months, so waiting longer is likely. Another Bloomberg ETF analyst, Eric Balchunas, expects the SEC to review and approve the S-1 forms by mid-June. In his opinion, the issuers face one round of comments on the amendments ahead. The same process was followed for spot Bitcoin ETFs. The entire process took about 2 weeks then. Many in the crypto industry have called the approval of spot Ethereum ETFs a historic moment. According to Bitwise representatives, such a step will attract more attention to the second largest cryptocurrency by market capitalization, which ETH definitely deserves. VanEck's head of digital asset research, Matthew Siegel, emphasized that the approval of the instrument would positively impact the crypto market. We expect that the improvement in the political background will lead to further victories in new laws and courts, attracting investments in Bitcoin, Ethereum, and other open-source blockchain programs, he wrote. However, the main victory is that Ethereum is still not considered a security. Consensys, the developer of MetaMask, noted that the SEC effectively recognized ETH as a commodity. But the final status of the cryptocurrency is still unclear. It will be clarified after the regulator approves the S-1 forms. Earlier, Consensys filed a lawsuit against the SEC, accusing the department of exceeding its authority. In particular, the reason for the lawsuit was inspections at the Ethereum Foundation. For several months, many speculated that the SEC wanted to recognize ETH as a security to reject all applications for launching spot Ethereum ETFs.